This video will be about how to buy a stock. So after you've done your research and you understand the risk that comes with investing in the stock market, you go to your brokerage account. Now your brokerage account is where you buy and sell your stocks. You got Fidelity, Interactive Brokers, TD Ameritrade, Charles Schwab. There's a lot of brokers online that you could choose from. They all essentially do the same thing, but they don't all offer the same. Like Interactive Brokers, for example. If you wanted to buy futures, you can on Interactive Brokers, but on Fidelity you can't. So you want to make sure that before you put any money into any brokerage, that whatever your investment goals or whatever type of market you want to trade, that broker allows you to trade it. But this video is about how to buy the stock. The final steps of actually buying the stock, they're all the same. You have the symbol. We're going to use Apple for example. The ticker symbol is the 3 to 4 letter abbreviation for that company. AAPL is Apple, and that AAPL will work on any other broker. Then you have action. Buy, sell, and sell short. Buying is when you think the value of the stock will go up, so you buy shares in the company. You want those shares to appreciate so you can make a profit. Sell is when you own shares in the company already and you want to sell some of them away. It's either you sell for a profit or sell for a loss, either way. Sell short is when you expect the company to go down, the value of the company go down. So what happens is when you short a stock, you're borrowing your broker's shares of the company. Charles Schwab will have a certain amount of Apple shares in its portfolio, and they lend you those shares. And when they lend you those shares, you short them at that price. So 236.21, you're shorting Apple. You make money if it goes down. If Apple goes down to 235, you make $1 profit. If it goes down to 200, you make $36 for every share you shorted. But if it goes the other way, if it goes to 240, you lose money, just like if you lost money just by going long if it went down. Quantity is how many shares you want. You can buy one, you can buy however many that Apple shares are available, and that's called shares outstanding. And then you have order type. You got market order, limit order, stop limit. We talked about this before in another video, but the go-to is usually limit because you want to pay exactly what the price is. And then you have order type. Some brokers offer more than 4 options. And then you got timing. Day only, good until canceled, fill or kill, immediate or cancel. They're all self-explanatory. Day only means it's only good for that day. Good until canceled. If it doesn't get filled, you drop it. If it's not done immediately, you cancel. So you review it. Apple, buy 100 shares at 236.21. That means if it hits 236.21, I'm going to be owning 100 shares of Apple and it will show up in my portfolio. Estimated amount, review order. In some brokers you can actually cut out the review order, so it's a faster process. If you're a day trader and you want to get in and get out as fast as possible, then you don't want to waste any time with extra steps. So it would be submit. Since it's Sunday and it's not even during after hours, it's when the market's closed completely, I'm not able to submit this, but this is just an example. So you submit. If it hits 236.21 on Monday, I would get filled 100 shares and it would be in your portfolio. That's how you buy stocks.